TradeTheNBI.com. This is John. This reports for the 28th of February. So we go into the end of the month below the 50%. That's surprising. We had enough of the magenta over yellow in the last couple of days to hold where we were, along with the rising steel and the continued drop of orange, setting everything up for stabilization. And of course, we were looking to the NASDAQ, which seemingly had the strength. Really to support things. The dip down to the 38% bought up nicely, and that really was enough. And again, this is that continuation of mixed economic signals and something that we expected would continue. Yes, there's still plenty of trouble areas on the horizon, but for now, there's enough stabilization and so much pressure to the downside that um, it doesn't take much to create a reverse flow and really drive things. And again, I think it literally watching where we are with bonds in that and interest rate move there again becomes both a drain and support to the market, and it becomes just a simple thing to follow. The NQ you can see much stronger here, well above the 50%, fighting right around that 61. You have both rising white as well as magenta, and it just creates a counterflow. So when you get strength to the upside, you're going to get runs, and then literally to the opposite. And you can see even from that extreme, it's a back and forth dip below the red line and above the green, and that just shows the mix of uncertainty. And within that, literally, you got to follow where we're at within those configurations. If we get any pivot of magenta below that 25 level, I definitely think that 50% becomes a key factor here on the Nasdaq, and that certainly would impact the S&P at least to the 38% or below from where it is. So it becomes critical to watch. And again, a move towards the zero with the TLT Treasury setup, and looks like it's very conceivable with what we've got from those readings. That would be the catalyst to most likely drive the market down to those levels. So it's certainly something to watch. Oil continue to creep higher, and this is part and parcel of a two-pronged thing, and the Fed's not objecting to it because it really sucks out a lot of liquidity, which but it doesn't help with inflation, because at the end of the day, higher fuel prices just support uh, a higher adjustment in prices, and it's going to continue if the uh, underlying currency devaluation continues. Oil and some of these other commodities, they're not going to fall whether the supply exists or not, simply because they're not going to accept the devaluation configuration within that. And you would think that that will start to spur gold, and most likely it will. We've filled back everything from a positive extreme area, and certainly gold in this pullback. Um, hasn't changed what the readings are. I mean, it's still pretty bleak from that shakeout and everything, but I would imagine it probably starts to stabilize here to begin a new upside trajectory. From a euro standpoint, still holding right in this. I would say it's still a little bit precarious, because again, below that 104 range gets difficult, but it's a hard way to make a case for the euro and even the pound at this particular stage of where things are at. The U.S. is really driving the situation, and solely going to be up to the Fed on where these things end up. And it's an interesting thing, but it's been this case since the 2008 collapse. The Fed has dictated where markets have moved, and they're going to continue to do so. And I think the Fed has indicated that they would like to see a bit more softening, and they're unafraid of the rise in unemployment. And that, even though we haven't been seeing it, though, it's tough to gauge on those numbers, because again, they just drop people off the rolls, and that, I think, labor participation still becomes the relative key in looking at those overall numbers, because the month-to-month statistics don't mean a whole lot. But from a market standpoint, the market still reacts to them. So you have to go with what is, and what is what the market is doing. So we literally accept that while they may not be perfect, that's where people are going to derive their viewpoint from, and you have to trade accordingly. And Bitcoin, then this setup here, still holding up pretty nicely. Short activity decreasing, just waiting for a turnaround of the MBI Magenta would be enough to create the next spurt. We've moved already to that, and it held that 22K support quite nicely. So I think that it's got the potential for moving higher on that. And ETH, while it had outperformed before, now pretty relatively equal, except for much better MBI readings. You can see the significant difference of that with the turnaround of Magenta, and far fewer short indication on that one. And of course, I just had the intraday charts go down literally right before doing the report again. Decided to do backup, even though I keep changing the dates for when the backup can be. It's a strange thing. I'm still working with it. As always, though, updated indicators for March are all set to go, and you'll be receiving that email and be able to get squared away for the beginning of the new month. As always, though, trade well. See you on the Skype chat. Have a good one.